The euro and the British pound gained value on Tuesday, driven by data on Eurozone inflation. The bloc's annual inflation rate remained at 2.4% in November, in line with estimates. Core inflation came in at 3.6% year-on-year, beating forecasts. In addition, building permits in the US fell by 2.5% in November 2023 after rising by 1.8% in October, which weighed down on the greenback and allowed riskier assets to edge higher. This bolstered expectations that the Fed would change its approach to monetary policy and start cutting interest rates in the first quarter of 2024. The British pound gained on expectations that inflation in the UK would remain high, forcing the Bank of England to keep financial conditions tight for longer. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes consumer price data from Britain. On a monthly basis, UK inflation is estimated to have increased by 0.1% in November. The annual inflation rate is forecast to have fallen to 4.3% in November from 4.6% in October. The core CPI is seen declining to 5.6% year-on-year, which is too far from the regulator's target of 2%. The Bank of England will most likely continue to tighten monetary policy if inflation picks up. Against this background, the pound sterling is expected to extend gains, hitting new one-month highs. Furthermore, Germany is set to release data on producer prices and forward-looking consumer sentiment. In case of disappointing statistics, the euro may well suffer losses. Traders may also take notice of a speech by European Central Bank chief economist Philip Lane and flash data on consumer confidence in the euro area for December. Similar data will be released from the United States. The Conference Board's Consumer Confidence Index is expected to rise to 104 in December. If data is downbeat, the dollar will come under more pressure and extend losses against the euro and the British pound. And now let's move on to technical analysis. If the euro reacts negatively to data from Germany in the euro area, false breakout at 1.0955 will create a buy signal, thus driving the European currency up to 1.0984. If the price breaks through and consolidates above this level, the euro will most likely rise to 1.1009 and probably 1.1041, where I recommend going short on a rebound to catch an intraday correction of 25-30 pips. In a bear case scenario, if bulls fail to regain control of 1.0955, the euro will slide to 1.0924 or 1.0891, revising the previous session's gains. Long positions at 1.0924 can be considered amid a false breakout. At the level of 1.0891, it will be possible to go long on a rebound, counting on an intraday correction of 25-30 pips. Short positions will be relevant in case of a false breakout at 1.0984 or 1.1009. Speaking of the British pound, the situation is the same. A false breakout at 1.2703, 1.2698 following UK inflation data will generate a buy signal. If inflation rises, sterling is expected to advance to 1.2730. If the price breaks above this level, the British currency will most likely extend gains, rising to 1.2758 and hitting a new one-month high at 1.2790. At this mark, traders are recommended to go short on a rebound to catch an intraday correction of 20-25 pips. Short positions at 1.2730 and 1.2758 can be opened only in the event of a false breakout. Alternatively, if the price breaks through and fixes below 1.2703 after UK statistics, Sterling will suffer losses, giving up yesterday's gains and diving to 1.2677, 1.2652 and probably 1.2629. At the level of 1.2677, one can go long amid the false breakouts. At the marks of 1.2652 and 1.2629, it would be a wise decision to go long on a rebound in the hope of an intraday correction of 20-25 pips. Best of luck.